Hey guys, I'm with Matthew Stevens with Ross Mortgage today, and I wanted to ask him a question that I get asked all the time. I know you get asked this all the time. What are you seeing in interest rates, and where do you expect them to be a month from now, 6 months from now, 12 months from now?
Absolutely. It's a great question. It comes a lot. And so we need to kind of understand what drives interest rates. So at the time of this video, people talk a lot about what the Federal Reserve is doing. The Federal Reserve has raised the Fed rate. Now that is the federal funds rate, and it does not have a direct impact on mortgages. So people hear that and they think rates are going up, when in fact, sometimes the opposite is very true. So here's a really quick and easy way to figure out what's going on with mortgage rates. You can simply Google current mortgage rates. From there, you can put in your credit score, your loan amount, your down payment, and it will tell you an honest average of what's going on in your state and area about what mortgage rates look like. Now, typically, a good lender might be a little bit cheaper, but they're not going to be exponentially cheaper. The way that people get these really, really good or really, really attractively low rates is by buying down in fees, and fees are bad. I've never personally bought down my rate because what happens in a market like we're in right now, Adam, is that whenever the federal government, Federal Reserve has done what they're doing to try to fight inflation, whenever you're fighting inflation, you're trying to pull it down, right? And so by pulling it down, there's another word for that, and it's called recession. So stereotypically and historically over about the last 100 years, every time that we've seen a recession in this country, we've seen rates come down a little bit over a whole percentage. And so that's one good reason to really worry about kind of the payment and the money and the home that you're focused on, because in the middle and latter part of 23 for the next 6 months, there's a strong chance you'll be refinancing and lowering your payment anyway. The problem with that is, and I'm gonna let you talk about this, but is inventory. Nationally, we have an inventory issue. Are you seeing any opportunities for inventory to go up or down in this area in South Kentucky in the next 6 to 12 months?
I would say inventory is probably going to stay the same, if not go down. And I think it's really tied to the interest rate.
Yeah.
You know, what we have seen is a lot of people are in at 2.5%, 3.5%, 4.5% interest rates.
Okay.
And since prices have not dropped like people thought that they might, there is no incentive for them to go into another house unless they just have to make a move.
Yeah.
So it would be, price-wise, it would be a lateral move. So you would be losing a 4.5% interest rate to get a 7% interest rate on a house that's the same price. So that's one of the reasons why you're not seeing more inventory hit the market, is because people have no urgency to move.
Okay. So let me ask you this, because if I believe that rates are going to come down, so stereotypically, like in the COVID times, we saw prices just jump whenever rates just bottomed out. So we can see even a short-term historical correlation between lower rates equaling higher prices. Higher prices are going to mean more equity for your sellers, I presume. So the question I've got for you, if you feel like that inventory is tied to interest rates, and I'm telling you that historically there's a strong forecast that rates are going to come down, that means that much like the COVID times when rates come down, I don't think we'll see COVID rates, but I do think we'll see rates come down on average about 1% or a little better. But whenever the rates come down, home prices tend to go up. So that means your sellers are going to see more profitability and more equity gain. So instead of that lateral move, if you have people who are looking to list and sell in this year, would they have the opportunity to maybe upsize or upgrade their housing and standard of living if rates go down?
Oh yeah. So yeah, if rates go down, obviously they would be able to make that move because I believe that prices would go up. So they're going to feel comfortable about the equity that they're getting out of their house to make a move, maybe into a bigger house. It just depends, I think, on how much those rates would come down.
Sure.
Right? And then how that affects those prices as well.
And I guess it's also going to probably depend on the status of the house.
Yeah.
Because some houses probably will sell a little faster than others.
Right.
So what are you saying is a benefit to home selling quickly in the market right now?
Pricing.
I
think we've seen, you know, if your house is priced right, it's going to move quickly. If your house is unique, if it has land, if it's maybe more of a luxury type home that you have a certain amount of people looking for, those seem to be going fairly quickly right now because those are still highly sought after. But if you have a house that is very similar to your neighbor's house and their neighbor's house, and you're priced $10,000 higher than what the other one's selling for, it's going to set. And we're seeing that now more than ever. Days on the market are up, and for the houses that are priced right, they're selling quickly. Average price in Logan County right now is $230,000. That's sold price. Average listing price in Logan County is $396,000.
Ooh, okay.
Right?
Wow.
So a lot of those houses that are priced at $275,000, $300,000, $325,000, those are the ones, unless they have land, unless they have something pretty unique, if they're not priced right, they're setting. And then if you are in that $225,000 to $240,000 range, your house, I would expect you're still seeing multiple offers, and you're still going to see it go under contract within a few days.
Okay. Well, man, I think that's helpful. So you asked me also about the next 12 months. So we have an election coming up this year. And so much like gas prices, you tend to see interest rates begin to become more attractive during election time.
Yeah.
None of the politicians, and I don't care what your political affiliation is, whether you're a donkey or an elephant, no politician ever wants to go into election and people say they have pain points. So magically, life just gets better with cost of living around election time, which is another reason I'm going to call it for lower interest rates in Q3 and Q4 of 23. Now, depending on the election, what happens in the overall economy is going to depend on how much lower those rates are going to become. But as you said, I do agree that inventory would get tighter regardless of any lowering of interest rates. And that's going to mean that sellers are going to maximize profitability. But if inventory is tighter and rates are lower, that's also going to introduce more buyers to the market. And so do you think we'll see, if given that information, what's that going to look like for a competitive buyer in the future?
So that kind of goes to the question of, do I buy now knowing what I know, or do I wait and try to play the market and see what happens? So if you wait, which some people are doing, some people are doing it because they can't afford the house that they wanted. So their interest rates went up, their payment went up $200 a month. They just can't afford it. So they've got to wait. Some people are trying to time the market, but it's going to be just like it was, in my opinion, with the inventory being low, just like it was in COVID. When interest rates went down, the market got super hot, prices went up. I think that if we saw prices or interest rates get back down around 5%, 5.5%, I think you're going to see the same thing.
Sure.
I think you're going to see a rush to the market. I think prices are going to have to go up. So does the price increase outweigh your interest rate savings? I don't know. I think that's something that everybody has to kind of figure out on their own. But I do think, I kind of agree with you. I think you're going to see interest rates drop before the election next year, just out of the cycle that we typically would see.
Well, let's dive into the numbers, okay? So let's say that Logan County appreciation, I'm guessing, you can correct me here, is going to be somewhere between 6% and 8% currently annually. Is that remotely accurate, or is that a little aggressive? Right
now, we are at about 3% from year-to-date 23 of year-to-date, or 2022. That's where we're at right now.
So year over year, 3%.
That's for last year, but that was.
Let's work with that.
We were at 46% from the beginning of 2020 to right now.
Let's play it safe and conservative. 3%. Average home sales price right now about $225. Is that what I heard you say?
225, 230.
225, 230. So 3% of 225 is going. 1% is 2,205. 22,500.
Somewhere around 2,200.
Around 2,200 times 3 is going to be around $6,650.
That's right.
Okay, so that is 3%. So year over year, that's as bad as it's going to be.
Right.
Is you will lose out on $6,600 in home price. Now, as a certified mortgage advisor, I can tell you a cost of refinance is about half that. So there is no financial reason, if we're just talking about math, that someone would ever say, I'm going to choose to wait because I think it's going to be cheaper. That doesn't make any sense, because your refinance is going to cost half of your appreciation year over year. So while you can say, I don't know, I'm going to say with certainty I do know, because realistically it's just math.
Right.
And so for someone to buy now and then refinance whenever we have all the indications of recession, and we know full well, and we'll post a graph, that recession equals rates going down by about a percentage or better, you're going to lose money by waiting. And what worse, from what I hear you saying, is if I'm a buyer and I'm qualified now and I choose to wait, I might have more competition for the house I want.
Oh, I think you definitely will. This is probably, I mean, the inventory is the lowest that it's been since before COVID.
Yeah.
And so you're definitely going to have more competition as soon as interest rates go, and you're going to have less houses to choose from.
Wow.
So, you know, I would agree with you. Now, one thing you just said that, and then earlier you said you don't encourage people to do buy downs or fees most of the time.
Right.
So I actually had this conversation with a buyer the other day. It was, do I buy my rate down? And this was on a $500,000 house. Mm-hmm. So, you know, not typical, but typically on a rate buy down on a $300,000 house, to buy it down a point, how much would that generally?
Well, a point by definition is 1%.
1%. Can you even buy it down a point?
You can buy it down a point. You can buy it down half a point, but a point does not correlate to a percentage of the rate.
Correct.
And that's what we need to clarify. If you pay a point, you pay 1% of your $300,000 loan, you're paying $3,000. Now, if your rate, and this is not an offer to lend, I'm just doing examples. Your rate is currently, let's call it a horrible rate, at 7.75. You got bad credit, this, that, and the other, you're at 7.75. If you have to pay a point, sometimes you might have to pay a point just to get a rate. Now, you might not get a lower rate, you might get just a rate because you have bad credit. But if you're trying to buy down the rate, you might be paying $3,000 to get it to go from 7.75 to 7.5 or something like that. Right. So you have to do the calculation on your break even. If I spend this much money and I'm saving this much on the month, how many months of savings is it going to equate to me paying off my money that I spent?
Right.
And now the problem with that is, and I had a similar conversation with a client last week, is they had come to me from a different lender who was trying to charge them 4 points on a $250,000 loan. So that's nearly $10,000. And with the knowledge I gave them that, hey, rates are anticipated to go down, you would be really frustrated with me as a client if I said, oh, sure, buy down your rate really low to 5.5%. And then I fully expect in the end of the year, as you said, where there's a possibility we might see rates at 5.5%. And then my client would be out $10,000.
So if it costs $3,000 to refinance, you know, give or take, they're out $7,000.
Yeah, you lost $7,000. You donated that to the bank. Yeah. And I mean, there's a lot of better places to put that.
Yeah, I agree 100%. Very interesting. Just a lot of good stuff there.
It's math. Let's work through it and then figure out the best numbers for folks. That's what we do. A lot of times you get accused of just trying to sell a house. And I get accused of, hey, I care about the rate. And on my side of things, we don't get compensated on the rate. We don't get compensated on the closing costs with my company. With your company, you only get paid a percentage of the sales price. Mm-hmm. And so for us to build wealth, I need to do more loans. You need to sell more properties, which is why we want to have conversations like this and help our clients focus on the numbers that's going to increase their wealth and maximize.
Right, and I think at the end of the day, I'm like this, our company's like this, I think you're like this. We just want to give people the information as we see it with something that we would do if we were making that decision. And you know, I love selling houses, but I don't want to sell somebody a house that they don't want or that's going to get them in trouble. You like giving loans, but you're not going to give somebody a loan that you think that they probably don't want or they don't need. So you know, at the end of the day, we're just trying to be honest and truthful with everybody, give them the information that we have, that we think, and then try to lead you down a path of information that, you know, the consumer can make their own decision.
And the big benefit to them is they win, they understand more, and then they tell folks about us because we treated them right. That's an easy business model. It makes us all win together.
Well, hey, I appreciate all the information.
My pleasure.
Thanks for making the video with me. Hope everybody can learn something from that. Not sure if we're right or not sure if we're wrong, but if you have any questions, feel free to reach out to us anytime. We'd be glad to talk to you.